what happened to GBPUSD. Very, very beautiful, guys. Look, in line with higher previous week, which is where liquidity lies. Okay, I'd like to show you where liquidity lies. Okay, so I'm not going to extend it all the way to the right side, which is where liquidity lies. Okay, so look at this consolidation opening the week, price top hunt low, retest previous structure here. Now, my expectation was for price to retest this zone and break low. Okay, retest this zone and break all the way low. Right? So buying this was just a buying this was just a temporary buy. Okay, although we could see what happened here, consolidation, stop on low, retest the zone and rise. I'm going to show you going down to the 5 minutes. I want to show you how beautiful it is on the 5 minutes. Sorry guys, my network is a bit slow. I apologize on behalf of my network providers. Okay, so look at this. You can see the consolidation zone here. Okay, you can see the consolidation zone. I could put it this high. You can see that. Okay, price consolidates, now breaking the high. You can see the low of consolidation. You can see the high of the consolidation. Stop on low, grab liquidity, shift away aggressively from the zone. Retest first time, right? This becomes your first entry on the 5 minutes. High of consolidation, low of consolidation. Look at that, 11 pips. And where should be your target? All the way here. Okay, 11 pips, guys. Just look at that. Right? Isn't that like a 125.8? Risking 1% at 11 pips. Right? Whether price came back here to tap again, none of your business. The point is, it never got you your stop loss. Okay? As a matter of fact, this rejection projected another entry opportunity for you for a second position. So you have two positions here, risking 1% each, which is 2%, and you're going all the way for what? 5.8. So that's approximately 10%. Okay? Approximately 10% and more. So you risk 2% to get 10% of your equity. Just think about that for a second. No matter the amount of equity you have, $1,000, $2,000, 3,000, 4,000, 5,000, all you did was risk 2% to gain 10%. Okay, beautiful trade on 5 minutes, and all it took was 6 hours, less than a session. Okay, all it took was 6 hours, and you know, you're all the way up there. Okay, so going back to 30 minutes. Okay, so first entry. Now you can see what happened. You can see what happened. Price did not reject at that zone. Okay, price shot through it and started consolidating. Now again, the consolidation gives them away. So the consolidated here came back down and consolidated some more with longer candles. Okay, this is called a cord of wood. Okay, it's called the cord of wood. All right, whenever you see this setup, the market is most likely going in that direction. Okay, and you see 4 candles line up, none of them breaking the previous high or low of the first candle, right? They most likely go in the direction where it's facing. Okay, this is Mofel loves to take this kind of setup. Okay, so you can see where it's happening, which gives you a confluence to the trade. It's happening at the high of Monday. Look at that, at the high of Monday. Okay, right at the high of Monday. That's where it's happening. Okay, right at the high of Monday. So you can see that shift that happened there. That would be my trade. Okay, if it shifts, it comes back to the high of the consolidation. I'm going to mark this out. That's the high. This is the low right there. Sorry, let me align it perfectly. Perfectionist issues. Okay, so that's the high of the consolidation. This is the low. 13 pips. Let's say 14 pips. 14 pips. Where am I taking it to? I'm taking it to the high of the previous week. And look at that. Okay, look at that. 97 pips to bag in one trade, risking 1% by 14 pips. So all you have to do is 97 divided by 14. That's approximately 6.5, 6.9. Okay, so you're risking 1% to get 6%. I'm going to put it at 6%, depending on your broker spread for the pair. Okay, but note that it's 6.9. Okay, approximately 7%. But you risk 1% to get 6%. That is, if that's not the most beautiful trade ever, I don't know what else you're looking for, right? There's so much more better than this, but to risk 1% and get 6%, that's just beautiful. Now imagine if you risk 2%, imagine if you risk 3, imagine if you risk 4, imagine if you risk 5. That's depending on your risk threshold, okay, your risk appetite, right? Very beautiful trade. Now again, what happens? Price breaks the high of Tuesday. Tuesday ends here. Price breaks the high of Tuesday. This is the high of Tuesday right there. Price breaks the high and comes back to the zone again and gives you a beautiful rejection in line with a bullish order block. Okay, in line with the bullish order block. Your rejection right there gives you the trade. Again, this is what you get. Stop loss below 21 pips and all the way back to the zone. You'd have to take it all the way high here. You do not know if it's going to get there. Okay, your stop loss or your take profit should be at or close to a key level, not above the key level, not below the key level. All right, depending on the trend. So in this case, we're going at the key level or below, your choice. So I'm going to put it at the key level. So you can see at the key level, we're getting 76, risking 21. Okay, risking 21. Okay, so rough sketch. So looking at 3.6. Okay, you're risking 1% here to get 3.6, which is very beautiful. Okay, so when you structure your trades like this, you realize that it helps you better. Okay, it helps you trade in line with your plan, and you never go against your plan. Whenever you go against your plan, whatever happens, it's on you. Okay, it's completely on you because you fail to follow your plan. But when you trade your plan, no matter what, you have no emotions attached to it because you traded your plan, and you have done this multiple times to realize that there is no there is no there is no there is no constant play in the market. Okay, there's no absolute behavior in the market. You can tell yourself when you see a bearish engulfing, you're definitely going 200 pips. No, right? But the eventuality that it does, you took it because it's in line with your trading plan. Okay, so this emphasis that I'm making here is the need for a trading plan. For those of you that are yet to get a trading plan, this is the need for it. Okay, so we also have other entries here. Since we're in the bullish structure, you can see consolidation here. Price breaks out. What are we looking for? Bullish engulfing. Okay, whenever you see bullish engulfing at the high of the consolidation, don't even disturb yourself to go and place your stop loss below the consolidation anymore. Just put it below the candle. You have 12 pips here, and you're going all the way high for 40. Okay, you're going all the way high for 40. You're looking at around that's around 123.7. Okay, they're about 123.6, 123.7 if I'm correct. Okay, so very beautiful trade, guys. Okay, using your risk to reward.